What's up, guys? Welcome back. Johnny here, and I got another exciting video for you today. In today's video, we're going to go over Procter Gamble, or ticker symbol PG. Now, I'm going to go over the history using Yahoo's max chart. We're going to go over the highs, the lows, about their earnings. We're going to go over news, wise house predictions, future growth and projections. We're going to go over competition, if any, dividend history, and all over a summary of why this is a strong buy. So stick around. It's going to be a great video. Alright guys, so as you can see here, let's go to Yahoo Finance. I like using them for their max chart. Looks like this company was founded around 1985 for about $3.47. You could have got into this company well before my time. But as you can see, it had steady growth all the way up until October 1999. It got a high of $54. And then, of course, the whole Y2K thing happened. Everyone sold and lost about 50% of its price value. Then it started going back up, doing good, surpassed its highs from previous years up to $73, and then it crashed in 08 all the way down to $47. So almost about 25-30% loss there, and that was during the housing crisis. And then it slowly went up all the way up until we get to about 2019. Then it dropped a little, and then it went all the way back up to October 20th, slight dip, and now there we are here. Now, this company has an EPS of 547, has a PE ratio of 29, and as you guys know that have watched my videos in the past, I love the PE ratios to be under 50. Now, they do have a forward dividend of $3.48 for the year, which brings a dividend yield of 2%. So this is a safe dividend in my opinion. Ex-dividend date would be October 21st. So they just had a dividend payout recently. Now, as far as news goes for this company, the only thing that I've really seen worth mentioning would be the P&G webcast discussion for the second quarter earnings, as well as Procter & Gamble stock sinks as market gains. What should you know? Now, they closed at 157 for a slight decrease, but as you can see, now we're at 161, so it's made back all that momentum. We're up 1% for the day. Now, as far as any more kind of history or anything, or competitors, some of the competitors would be Johnson & Johnson, possibly, and a few others. It has beat its actual, which was 126 over 119. 113 was the actual over 108, and then this recent 161 actual over 159 estimate. So that is really nice to keep beating its predictions. Now, revenues are still up there at $76 billion, while earnings is around $14 billion, which is great. This has been rated a buy between buy and hold on this site at a 2.5, and so that's what I see here as far as Yahoo can tell us. But that's not all. I have a lot more coming. Let's go ahead and go over to the Street Quant rating, right? Now, the Street is saying pretty much the same, that it is a buy rating, which in my opinion brings it to a strong buy, because there is no such thing as a strong buy. But I'd say A+, A, and A- are all strong buys in my opinion. This rating has been a buy rating since April of 2020, and as you can see here, their target price is $184. So you still have potential, you still have time to get in on this company and make some serious money in the future. Price as of 12/22 was $159 when this report came out. As you guys know, we're already up to $161.94 on the day, and has lots of room to grow, over $20+ still. Now, What are they saying about this company? Recommendations: we rate Procter and Gamble Co. a buy. This is based on a convergence of positive investment measures, which should help this stock outperform the majority of stocks that we rate. Now, the company's strengths can be seen in multiple areas, such as revenue growth, reasonable valuation levels, increase in stock price during the past year, and largely solid financial position with reasonable debt levels, but most measures and notable return on equity. Now, we feel its strengths outweigh the fact that the company has had subpar growth in net income. Highlights would be that the subsector average of 8.3 compared to prior quarter last year, slight increase to 5.3%. Now, Procter & Gamble's earnings per share increased its bottom line by earnings of $5.49 versus $4.96 last year, which is great. The debt to income ratio is somewhat low, currently at 0.71, and is less than that of the subsector average. Returns on equity has improved slightly when compared to the same quarter last year, which is great. And as you can see here, Procter & Gamble falls within the manufacturing sector and the soap, cleaning compound, and toilet preparation manufacturing industry, which means that the Street Quant is currently tracking 2,000 companies in the manufacturing sector, which is around $27 billion in market capitalization, as well as $9 billion in annual sales. The chemical manufacturing subsector accounts for 15% of those revenues. And as you can see, P&G is right here on the more favorable side, but not as high as revenue growth. So it is favorable, but the growth could be a little bit better. Now, their recent price compared to their market cap of 385, I believe that's a billion. Price earnings 29, net sales 77 billion, net income 14 billion. So not bad, right, guys? Okay, so stock at a glance. Now, for growth, it's got 5 out of 5 stars. Total return 4.5 stars out of 5. Efficiency 4.5 stars out of 5. Price volatility is 5 out of 5. Solvency is 5 out of 5 stars. And income is 4 out of 5 stars. Why? Because the measures dividend yield and payouts to shareholders. This company's dividend is higher than 70% of the companies they track. So that 2% dividend is nice and safe and gives you a means of some income. Now, the financial analysis is saying that Procter & Gamble's gross profit margin for the first quarter of 2022 has decreased when compared to the same quarter of last year, but at the same time, during the same period, equity has remained virtually unchanged, only decreasing by about 4% compared to the same quarter last year. I believe this company is a strong buy. They're doing great things. It's amazing. Let's go to the dividend. What is it? I forgot what it's called. It's called the dividend calendar, I believe. And while that's loading, guys, as you can see, all the volatility here on the RSI indicator as well as the MACD shows it's being oversold as well as being overbought and complementing itself throughout. Now, this company has made some big gains over the last year, but not only to mention that, you can see big gains intra-day as well, or intra-week. As you can see here, there's a lot of volatility going from highs of 141 to as low as 137, back up to as high as 144. So if you played your cards right, you could be adding a substantial amount of equity to your position, or adding more position to this by adding more on the dip and holding out until you get to a high and then buying again at a dip. That's kind of one of the strategies that I like to use. Let's go ahead and get into the Nasdaq dividend calendar. That's what it was. I really like the Nasdaq dividend calendar, as well as the street rating by Kramer and Webull, of course, for all of its awesome just functionality. As you can see here, there's a high of 147 and then it dipped as low as 137. Now, why not put more shares into this and create a bigger position for when it goes up again to 144, sell out and make a quick almost $10 per share. I mean, you could make some good money if you play off of these single stocks. And at the same time, you could just ride it out from 138 up to 161. You'd be sitting at about a $22, $23 profit per share, holding it from 2019 to, or I'm sorry, not 2019, from October to now in December. So about 2 months, and you would have gained $30 per share. Now let's go ahead and look up the exact one here and see what their dividend report is and what their history looks like, because guys, I want to give you guys the most information I can so that way I can do the research for you so you don't have to. We've gone over the abouts, we've gone over earnings, we've gone over the Yahoo Finance side, the highs and lows from the max chart, and as well as any competition, news, hows, and things like that. Last but not least is our dividend history, and then a summary of why I believe this company is a great company to get invested in. Let's look at their dividend history here. Now, P&G dividend history is showing that they have, oh, well, if it loads, we'll let that finish loading. As far as news, financials, things like that, we can go over a little bit more of that here. Financials, again, they've been beating their estimated earnings per shares the last few quarters. Their balance sheet looks good. Their cash flow is looking great. Finance ratio is looking good. As far as their income statement, not bad at all. They're actually making some money and increasing over time. Cash flow is slightly down. As far as analysis, from 24 analysis, they're saying it is a buy rating with a low as 126, an average of 154, which it's currently beating, and a high of 175, which is close to the street rating of the 182. As you can see, the support and the resistance levels are constantly going up, not down. You want to see trend lines going up and not down. You want to invest in companies always steadily going up. Never invest in companies that are steadily going down. That's pretty much common sense. Now, as far as the PG dividend history, their dividend yield on here is saying it's 2%. That's $3.50 per year, just slightly under at 3.479. PE ratio is at 29, which is amazing. And their ex-dividend date was October 21st. That was their most recent, making 87 cents per share on top of $30 of appreciation per share. Not bad, guys. Not bad at all. Payment date for that was on November 15th. This is a quarterly paying stock, so you'll get 4 payouts per year. But as you can see, going back to 2013, they started at 60 cents and have been paying a consistent dividend while increasing the dividend over time consistently for the last 6-7 years. So not bad. 7-8 years, going on 9 years now, they have consistently been paying out dividends and increasing their payouts to their shareholders. That is why I believe that P&G is a great company to get involved with. I love them as a company. I have a few shares in this company as well in another account, and I just believe that it's a strong company to have to hold long-term in your portfolio. Why not? It's a great way to weigh out some of those losers or some of those companies that are speculative stocks that you're waiting to see grow. But at the same time, it's a nice way to get some quarterly income while being able to see that growth. Now, guys, $30 per share in only 2 months is amazing. If you had 10 shares of this company even, you would be at a solid $300 for 2 months. That's $150 each month in profits if you wanted to pull that out. Now, they did do a split ratio, a split from 2 for 1 back in 2004. Doesn't look like anything as that such would be happening anytime soon with this company. But as far as that goes, guys, I appreciate all your time. And if you're not sure who or what Procter Gamble is, you guys are nuts, or maybe you don't live on planet Earth. But Procter & Gamble focuses on providing branded consumer packaged goods to consumers across the world, such as segments in beauty, grooming, healthcare, fabric and home care, and baby care, feminine and family care. They sell a variety of products in many countries and territories through mass merchandisers, grocery stores, membership clubs, drugstores, department stores, distributors, baby stores, and specialty stores. Some of their high frequency items and products that they do send or sell to the public is Head and Shoulders, Herbal Essence, Pantene, Rejoice, Olay, Old Spice, Safeguard, Secret, Braun, Gillette, Crest, Oral-B, Metamucil even. I mean, it just goes on. Pepto-Bismol, Vicks, Downy, Gain, Tide, Cascade, Dawn, Febreze, Mr. Clean, Swiffer, Love's, Pampers, Tampax, and Puffs and Charmin toilet paper. So this company is a conglomerate of financial or of health and beauty products. It is crazy how many products they own and sell on a daily basis, which is a great way for them to stay profitable, but a great way for us as shareholders to get in on some of that action and get a piece of that pie too. So I hope you guys enjoyed this video. If you want me to do a video on any stocks in the future, let me know and I can do the research for you so you don't have to. Remember, smash that like button, hit the thumbs up, and if you haven't subscribed, subscribe and do it now. If you're still watching this video, thank you for your full support and appreciate all your I appreciate all of you and all of my followers and subscribers. Thank you and have a great day.